This is a training video on IRS due diligence requirements for earned income credit, child tax credit, additional child tax credit, American Opportunity Tax Credit, and other dependent credit. So what is this and why do we do it? Went to the IRS website here. So it's a requirement for paid preparers when claiming these credits. So I'm going to scroll down. What we really want to focus in on is the knowledge base. So the bottom line, you must not know or have reason to know that any information you use to claim these credits or had a household filing status is incorrect. So the client's going to give us the information with the client info sheet. It's going to have basically for dependency, obviously the client's name, their age, their relationship, and their months and home. So those are 3 out of the 4 requirements needed. So if you suspect something may be incorrect, or maybe maybe the relationship is niece or nephew, or there's not 12 months in the home, you need to ask the next question. So we went through that in our training in the 2020 problems. If you don't understand it, come to me or go back to the training videos. So I'm not going to get into a full-blown due diligence training here because we already did that. But I just want to let you guys know for my senior or my first year preparers or even my second year preparers, I want you to do this, ask these questions on every turn. So do you have proof that the child is related to you? Do you have proof that the child lived with you? And again, we don't have to be like the police. You just kind of nonchalantly do it in the conversation so they don't feel threatened. Again, we want to say this is an IRS requirement. We want to try to get your refund to you as quickly as possible. So we have to ask these questions. We don't want to look like the bad guys. Again, the IRS is the bad guy. They're making us do it. If we don't do it, we will get fined. So the reason we're doing this is because the IRS tells us to do it. How the IRS makes us do it is they fine us. So right here, and I thought this was higher than that, but it's $600 per credit that you don't ask the question, because there's so many credits on a typical tax return. This could be a max of $2,400 per return. So if the IRS were to audit us, they haven't done it in a while, so knock on wood. If they do, they typically will ask for 25 returns, look at them, see if we met our due diligence requirements. If we didn't, they'll fine us per return. Now, if you do everything I teach you to do, if they actually fine us and we have to pay a penalty, I pay the penalty. So how it works is it's a penalty on the individual preparer, and then it's a penalty on the tax office. If I don't do my due diligence teaching you how to do due diligence, I get fined. I'm trying to do the best I can to tell you, ask the next question to make sure that child really should be on the tax return. If you bypass what I teach you intentionally, you will pay the penalty. So just do exactly what you were taught and there'll be no problem. But we have reviewers go through to try to catch to see if you're not doing what you should be doing, because the ultimate goal is, do the due diligence, make sure we're doing accurate tax returns, no one's filing a fraudulent tax return. That's the goal. That's what the IRS wants to have happen, because there's so much fraud in earned income credit. But this is how they enforce us to do that. They fine us with a penalty if we don't do our due diligence. All right. Now, how we document this, obviously, we have the macros in Drake to make it quick and easy. It's perfectly fine. The IRS allows us to have in-house due diligence. So what I taught you in the videos, we used to use a piece of paper to do all the checklists and everything. So now we found it easier. We just implemented this last year to build it inside of Atom to make it quicker and easier to document. And we don't have to run around and get a piece of paper. That's what I'm going to demonstrate right now. So if I'm going to go into Atom, I'm inside of a client file here, Betty Bing. So where that checklist, that due diligence checklist is located is in the event tax prep office. This icon right here, if I click on it, I'm going to go into my checklist. So this is all the paper that we use as our due diligence checklist. It's now inside of Atom. So exactly the same questions. You can uncheck the box here, and that expands it to just a long list if that's what you choose to see, if that's easier. And then you check the boxes off as needed. I personally like to have it organized by type. It's easier for me. So if my senior preparers, if they don't see anything wrong with this, it's the son, it's their, child is their son. They live with them all 12 months. We've been doing this return for years. There's nothing to suspect that this is an incorrect tax return. Then they would just click the view icon, come down here, check the box, information received appears are correct, consistent, and complete, and then they hit update. And I'm perfectly fine with that. Now, with you guys are first year preparers or second year preparers, you might not have the knowledge to know if this return is a correct return. It's just hard. It just comes with experience. Okay. Anyway, so typically it's my senior preparers. My other preparers, my first year preparers, second year preparers, probably should be checking these boxes. I just want to make sure it's an accurate return and we're not doing a fraudulent return. So say dependency. And again, these are the questions you learned in the training. Can you provide proof that the child's related to you? Did the child live with you? So if you just check these boxes off, did the child support themselves? No would be dad if they didn't have anything. Again, you just check off whatever applies, hit update. I got down here, if it's low income, niece and nephew, you got to ask for biological parent. Everything that you already learned, it's all just right here, just makes it easier. So when you're done, you just go back and then you're just gonna, and that's all we need to do, just to document it. So if you look right now, it's highlighted in green. So the reviewer will know that you did the due diligence checklist, and they probably will come in here and check. Just click on the icon, pop in here to see what you filled out based on the information in the tax return. So they're double checking to make sure you're asking the correct questions. And if you don't, they're going to send you a reviewer note to tell you to do it. So at a minimum, I do want everybody to check the box. This helps with the reviewers to make sure that at least you thought about it. And okay, again, you should at least think about it. So if you're doing a tax return and the person's making 100,000, we've done the return for years. They're putting down it's their son. They live with them all year. And of course, of the age, you got the birth date. Just come in here, check the box, get out. Now the reviewer knows at least you gave a little thought to this. And then they won't send you a reviewer note saying, hey, you forgot to do the due diligence. So I go back. Now, because a lot of us will forget to even open this checklist, what we've done is when you add an event, so your next, after tax prep and you're all done, you're probably going to move it down to review now, waiting. I hit save. My checklist is automatically going to pop up for me to complete. So I typically forget to hit that checklist icon. So this is a reminder, so then I don't forget to do the checklist. I usually ask the questions, but then I sometimes forget to document the answer. And the whole goal is you got to ask the questions, document the answer. If you don't do both, you get hit with the penalty. So I hit back. Now, if you find yourself doing the checklist right here and you don't have to have this reminder pop up when you do it, when you actually add an event, you can actually check this box, disable checklist, so then when I move it again, the checklist will not pop up. Okay, so this is our new and improved method of gathering the due diligence questions as opposed to using paper form.